There are so many opportunities, Seema. Healthcare has underperformed the market this year. However, you've had, like you said, certain names, LabCorp, Quest, Thermo Fisher. These guys have done incredibly well. Moderna is up over 100%. I say you cut the winners and you buy the losers. So what are some of the losers? Exact Sciences. This is a company that is a leader in cancer screening. They make Cologuard. It's a non-invasive test for colon cancer. You send them at home a sample of you know what, and they detect whether you have cancer or not. The stock has been whipsawed, going up and down from a high of 150 in February all the way down to 72. It's got depressed revenue growth and somewhat high fixed costs. Here's why. They hired 450 new salespeople in addition to their sales staff. They can't get in front of doctors because of COVID. Zoom doesn't quite do it. So the company, however, has got some big news coming up in January. They're going to unveil Cologuard 2.0 in January. I think that's going to jumpstart revenue.
Okay.
In Q2, they're going to release data on the new multi-cancer blood. They've got lots of going on.
$72 a share. It's down just about 21% over the past 2 years. I want to pivot to another beaten down area, if you will, which is IPOs. A lot of the names with high consumer interest like Sweetgreens and Allbirds, it's just fascinating to see how much these stocks have dropped since their big debut. But I believe you still see opportunity in some of these names. Give us your top pick.
My top pick, Bumble, okay? It's a women-centered dating app. High of 75, now it's under 33. Coupang, the Amazon of South Korea, opened up at 48, now it's 29. LegalZoom's another one, disrupting the market for legal services. You no longer have to pay big money to write a will. Hit a high of 40, now it's 16. Here's another one, not popular, Didi. Didi's the Uber of People's Republic of China. China's been throwing a tantrum, playing hardball with the publicly traded companies. But I think if you are a long-term buy and hold investor, this is a name you have to think about. It reminds me of Facebook from back in the day. Facebook went public in 2012, went out at 38, got all the way to 18, and what happened? Didn't look back. So I'm very excited about some of these names. 2/3 of the companies have underperformed, the new IPOs.
You really like to go for the beaten down names. A lot of people would argue that Didi is sort of a no-touch story given everything that China and the regulatory concerns. But there you go, trading at around $4 and change. Taking a step back, macro, we're here in the U.S., COVID cases increasing about 60% this week. Thoughts on how Omicron affects broader market sentiment?
I'm going to think of Omicron. I'm going to be positive on Omicron. You think about the Fed tapering, the Fed raising rates. I think the Fed is dovish, and any sign of trouble, and Omicron is trouble, is going to make the Fed back down. Because think about it, Omicron is going to affect restaurants. It's going to affect the service sector. People are staying home. Airlines, they're canceling flights. So I think Omicron is going to cause the Fed the Fed is looking for a reason to stay the course. And I think Omicron is going to do that. I mean, short of that, we're going to have pent-up demand in 2022. The consumer is tired of being at home. Consumer is tired of not being able to go out and spend. So I think anything now is only going to set up 2022 for pent-up demand. The problem with this, however, is that you're going to have inflation because you still have supply chain shocks. You still have labor shortages. So I'm bullish on the market for 2022.
A nice way to end the hour. A bullish outlook. What's the biggest risk for next year? Quickly, Kate.
Biggest risk, I'm going to go with the financials. I don't understand why the financials are so strong. Tepid loan growth. They've got lots of deposits they can't put to work. I would stay away from the financials. They've been big winners this year. Take your money and run.